What's going on, guys? This is going to be a good video. We're talking about pullbacks, one of the most commonly played patterns within the stock market, and they work great as long as you know how to trade them, and that's what we're going to learn today. I already made a video on pullbacks a long time ago, but the volume on the video didn't come out as we expected or as I would hope for, so it's a little hard to hear me, so that's why we're just going to go into it more right now. So today I'm only covering 1 minute pullbacks. So this is when we're looking at 1 minute daily charts. Excuse me, we're looking at charts 1 day, 1 minute. You can find pullbacks in 1 day, 5 minutes and 1 day, 3 minutes. But for now, we're just going to go over the 1 day, 1 minute, and it works the exact same for 1 day, 5 minutes. Looking at this chart, on the left we have CERU. I'm going to go ahead and we're going to highlight all the pullbacks. So go through it with me. Where do you think the pullbacks are? Well, the first one we have is right here. That's our first pullback. The price moves up. We see some selling pressure, people taking profits. We pull back to an area of support. Second one, right here in this area. We move up once again. We get some selling pressure and people taking profits. It brings us back down to another area of support. And if you're not familiar, the area of support that I'm pointing at is this blue line. That's a 9 exponential moving average. If you're not familiar with that, you can do some reading or even have a video that goes over explaining what moving averages basically are in a chart. They're nothing super complicated. They're not some crazy, rocket science stuff. It's just plain simple lines plotted that give you a kind of an area of support or resistance. Okay, so we get that pullback back to support and then we run again. This would be our third pullback. Right in this area. Where the price moves up, we see some selling pressure that goes all the way back down, touching almost the 9 moving average. Okay? Couple things here. A lot of times in stocks, you can see 1 pullback, and that'd be it. You can see 2, and that's it. Or you can see 3, and a lot of times we see 3. The first and second pullbacks tend to be much more reliable to play or take a position on than the third pullback. As you can see, after the first 2, and then our third, the stock comes crashing down. If I scoot over a little bit, the stock comes down. Usually after the third pullback, the stock gets corrected, and then we see it, either tank or it comes back down to the volume-weighted average price, and then we'll trade that way, and then we may break out, on a U-shaped breakout pattern. But for right now, let's just focus on the pullbacks. So a pullback occurs whenever the price on a stock goes up. We see some selling pressure, which is usually people taking profit, not trying to push the stock down. It's usually people taking profit, and that will usually bring the price back down to some area of support. And this particular time frame, it is the 9 moving average. Okay, so when we're talking about taking a position or entering on pullbacks, the most simplest way that you can do it when you're trading a 1 minute time frame or a 5 minute time frame for that matter is to play the break above the previous red candle in the pullback. Let me say that again. The best time to enter in on a pullback is when your first green candle or second green candle, it's the first green candle to make a new high above the previous red candle in the pullback. So if we look down at the chart, let me change over my tool here. If we look down at the chart, you can see this was the first candle to break above the previous high red candle or the previous red candle's high in this pullback. So as you can see, green candle, first one to break above the high, previous red candle in the pullback. That's our entry point. We enter in as soon as the stock gets over the high of the previous red candle. We go long, and then obviously you sell your position whenever you feel like locking in profits. I do want to mention it's not the safest thing to try and hold a stock through a pullback. So if you were to get in here, it would not be the best idea to hold through this pullback, hoping for it to run again, because it could very easily not. And it could just tank. And then you lose all your profits or you break even. So it's always best, or at least the style that I do that works for me and a lot of other traders, is to play the break above the previous red candle and sell your position as soon as you feel you've made your profit target, or you feel that it's going to start pulling back and the price is going to decrease. As soon as you start seeing any sign or maybe a red candle, that's a good time to exit your position and lock in your profits, and then wait to see if a successful pullback occurs on this pullback. So, right, you play this break, then you sell off your position because you don't want to hold it through the pullback. Well, your next entry would be right here on this candle. As soon as you get a break above that previous red, you can now enter for another position, another pullback. And then it rips all the way up. And this is where we get our third pullback, the riskiest pullback to play out of all the pullbacks. Usually your first and second are more reliable, than your third one can be a little bit more risky. And as you see, the stock ends up. So imagine this. Imagine you got in on the third pullback, right? And you're like, oh, I've seen them pull back and keep going and pull back and keep going. Well, I'll just enter in on this pullback. And even if it starts to pull back a little bit, I'll just hold it because as history repeats itself, it's done it in the past. Well, like I said, remember, the third pullback is usually the riskiest. So if you're a person that buys a stock and then holds it through pullbacks, try not to do it if it's the third pullback, because this could happen to you where you hold and you're like, oh, it's on support, it'll bounce, and then tank, boom, and then you can see what happens. The thing just completely drops. So with that being said, try not to hold through pullbacks, and your third one is always going to be the riskiest. So as we said before, your entries on these are the break above the previous red candle. So your first green candle to make a new high above the previous red candle in that pullback is usually your best entry on any type of pullback on stocks. And it's very good and it works very well. It's very efficient. And mind you, you have to be playing stocks that have high volume. Patterns like this are what day traders and retail traders and a lot of traders just in general look for. These are the patterns people look for and people trade. If you're trading a stock that nobody else is trading, you're not going to get the follow through needed on any of these plays to make you any money. Because if there's no one trading it, there's not enough buyers recognizing that pattern to push the price higher. So you want to be trading stocks that are trading on high volume. For those of you who don't know what that is, what type of volume, you want to at least, people have different trading styles, right? But the majority, the rule of thumb, is you want to be trading stocks with at least 5,000 shares of volume. Trading on at least 5,000 shares or 500K volume that will allow you to A, get in and out of your trades easily. The stock is very liquid. And what that means is you can get in and get out, you can buy and you can sell, usually with no issues with being filled or selling where you want to sell at the desired price you're trying to get out at. If you're trading stocks that don't have the liquidity, it's going to have a harder time getting filled. There won't be as many people to buy up your shares. You could lose, profit because you can't sell at the price you want to sell at, so on and so forth. So in order to play these patterns, in order to be successfully trading these type of styled patterns, you got to be trading the stocks that everybody else is playing, because everybody else is playing is looking for the patterns, and they're looking for these patterns to happen. And when they happen, and you have a lot of people trading that stock, you'll get the follow through needed to make that money. Okay, so just to touch a little bit more on that, we can go into stop losses on pullbacks, because pullbacks do fail. Okay, just because a pullback's happening doesn't mean it's going to be the bread and butter winner. Just like these ones, you could be in a stock that a pullback looks like it's forming, a candle breaks above the previous red, and then it just drops and it was a failed pullback attempt. And that's okay, it's going to happen. But being able to manage your risk properly on these types of trades is going to benefit you in the long run and make you a profitable trader. Okay, so back to the screen on the left. Where is a good point to have your stop entered at? An easy go-to stop loss, or a place where you're just going to exit the order if it's not going your way on these pullbacks, would be the break. That one's bad line. Would be the break below the previous red candle. So like we said, our entry was the break above the previous red, the break above. Now our stop would be a break below the previous red. Right? So we got a break above the previous high to go long. So your stop would be a break below the previous, a break below the previous red candle's low. Up here, your stop could be a break below the previous red candle's low. And the reason it's that way, let me touch on that. The reason we do that is because if a pullback is going to make it, it's usually going to break out above its previous red candle and keep running. If you break out above that previous red candle and then you come down and you break below the previous red candle, that's telling you that it's still downtrending. So you have been maybe a little bit early on your entry, or it's just a failed pullback attempt and it's not going to work, and you might as well cut your losses now rather than cutting them later down the pullback, okay? So a good stop would be a break below the previous red candle's low on all your pullbacks. There's a catch to that too. You don't want to play a break below the previous red candle's low if the candle's super long. If the candle's super long, you're going to be losing like 8%. That's where you want to make your stop a little tighter. Okay? So like me and Ricky Gutierrez, we try and keep a 2% stop loss where we don't risk more than 2%. And the reason being is that's just not you don't want to lose, but it's not a lot to lose. And if you can manage your risk properly, 2% is usually a good number. So always try and keep it right around 2%, 3% stop loss, or you play proper risk management, and I'll do a video on that a little bit later. Looking at the chart on the right, it's the same thing. These are 1-minute pullbacks. Okay, so your first pullback was right in here, your second, and then your third, which was a huge, it was almost a doji. When we're trading pullbacks, we want to see red body candles. Dojis aren't always the best because it's really indecision. We don't really know what's going to happen. So ideally, we want to see big red candles when we're doing pullbacks. But it's the same thing here. Okay, nothing's changed when it comes to the pullbacks. It's all the same style. They may look a little bit differently, but you play the break above the previous red candle to go long. You play the break above the previous red candle to go long. Play the break above the previous red candle to go long. Your stop will be the break below the previous low and break below the previous low. Right there. So now you have all your stops. You have all your entries. Now a bad place to put your stop on this one would be the break below the previous red candle here, because look how low that is. You see how big this candle is in here, and I'll zoom in a little bit more. You notice how big the candle is. So just from here to there, or past the candle, that'd be about almost a 5% loss. If you were to play the break below that previous candle right here, you'd be looking at about a 5% loss. Like I said, we try to keep it about 2%. So where you place your stop loss does matter, but an easy go-to one just off the top of your head without much thinking is a break below the previous red candle when you're playing the break above the previous red candle on your pullback. I know there's a lot of previous this, previous that, low, high, blah, 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 but enough of these videos and you guys watching them and rewatching, you'll be able to learn it and understand it. So that's how we play pullbacks. That was the 1 minute or, wrapping up what it looks like playing 1 minute pullbacks or just playing the 1 minute chart game. And like I said, if you look at most of these pullbacks, right, this pullback, you were in the trade for a minute. You were in the trade for a minute. Most of these pullbacks, this one you were in for 1, 2, 3, 4, 5, 6, but this one was only 1, 2, 1, 2. Most of your trades on these pullbacks are 1, 2, 3, 4 minutes long, so it's in and it's out, and you lock in that profit very quickly. Okay, so we're gonna finish up there. If you guys have any questions, please comment and post below. As always, I try to get back to everybody that comments and posts with any questions. That's just the way I am. I'm gonna try and get back to them as much as I can or as quickly as I can. And if you haven't already, join the TechBud Solutions group on Facebook. It's a group of over, somewhere around 35,000 members right now. And the members are worldwide, members from everywhere. So there's tons of questions being asked and tons of answers to all those questions. And it's just a nice place to be, because if you have questions, someone like myself or somebody you've already reached out to, you can't get back to in time, a lot of those answers you can find in the TechBud Solutions group. Is a very good group to be a part of, especially for stock trading. But we're going to wrap it up there, guys. And always, thank you for support and thank you for joining in.